Hey there, awesome accounting student. Mark Franke here. This is Counting 100, Chapter 12, where we're going to post our adjusting journal entries to a worksheet, balance out the worksheet for a merchandising company, how this works. This goes along with the video that I did with the adjusting journal entries. If you haven't watched that video, I would go back and do that one first and then come to this one. But the worksheets that the worksheet you're gonna use for this one is this video is in the in Canvas for that video. So without further ado, let's do this thing. We're going to, we first of all have the trial balance in here, all balanced out. I have frozen the panes on here. You can see that I can scroll down and I've frozen these titles up at the top. But in our trial balance, we have $289,640 in total. These amounts come right from the textbook. This is on page, let's see, 423 and 424, problem 12.5b. We're going to go through and post the adjustments one by one. The first adjustment is to write off the beginning inventory. That is a debit. So a debit to the income summary, and the income summary is down below here. There it is. And so that's going to be $16,985, and the credit goes to the merchandise inventory account. And then entry B is to record the ending inventory. That is a debit to merchandise inventory and a credit to the income summary. In effect, we are going to be taking to the income statement through an expense, goes along with purchases, the difference between the beginning and the ending inventory. Item C is the reserve for the allowance for doubtful accounts. That is a debit to uncollectible accounts expense, $12.80, and a credit to the allowance for doubtful accounts. Item C. Item D is a debit to the supplies expense for $505, and a credit to the supplies account. Supplies account is going down, $505. Item E is the insurance adjustment. Debit insurance expense. And you'll notice all of these adjustments, we're recording an expense. Debit insurance expense, $1,200. Credit prepaid insurance, $1,200. Prepaid insurance is an asset and it's going down. F is the depreciation on the store equipment. So we're going to debit, this is item F, $1,000, debit, $10,000, depreciation expense on the store equipment, and credit accumulated depreciation. Item G is the same sort of thing, but this time it's on store fixtures. We debit depreciation expense, store fixtures. This is 2050. 2050, it's item G. And I'm going to put the credit to accumulated depreciation on the store equipment, 2050. Item H is interest expense on the note. We have a debit to interest expense down at the bottom here. This is H for $90, and a credit to interest payable, $90. I is the accrual for our wages. These are for people that worked for us. We haven't paid yet. The debit goes to salaries expense. This is I. 1450. And credit salaries payable. 1450. Then we have J and K. J and K are the payroll taxes related to our accrued salaries. So I'm going to put J comma K as the reference. The total is $192. Debit to payroll tax expense. We have a credit for $90 to Social Security. We have a credit of $21 to Medicare payable. And then those are J, and then this is K for the FUTA payable, which is $21, and the SUTA payable. Oh, wait, sorry, not $21, $9. $9 for FUTA and $73 for SUTA. So now when I total up all of these adjustments, and I always want to do a total at the bottom just so I know that debits equal credits and I haven't made a mistake of some sort posting these to my worksheet. So $40,592 is the total, and it is correctamundo. So now we'll do the same thing on the credit side. $40,593. I think our payroll entry may have been off by $1. We now have posted, I had to change the SUTA payable to $72. I had just a few pennies rounding difference. I'm not showing pennies here, and it created a rounding problem, but not to worry, it was only off by a few pennies, and I've just fixed it by changing it to 72. So SUTA payable should be $72. Again, I'm just rounding everything to the nearest dollar. Let's do an adjusted trial balance now. So our adjusted trial balance, we're going to bring over the beginning balances from the trial balance. And then for anything that we adjusted, we'll have to, the allowance for doubtful accounts is going to be the 600 plus the 1280. Our merchandise inventory plus the debit side minus the credit side, 15,840. Supplies, we have a debit and then a credit. We have a debit minus a credit, 245. Prepaid insurance, we have a debit minus a credit, 1,200. Store equipment, 6,000. Accumulated depreciation is going to go up to 3,000. Store fixtures did not change. Accumulated depreciation on the fixtures did change because we made a journal entry. Notes payable did not change. Accounts payable did not change. And then we have interest payable, Social Security payable, Medicare, FUTA, SUTA, salaries payable, and continuing on, we have the capital account, didn't change, bring it over. The drawing account didn't change, it's a debit balance. Sales is a credit. Sales returns is a debit. Purchases is a debit. Purchase returns is a credit. We have the income summary, and we'll bring over both of those. Rent expense didn't change. Telephone expense didn't change. Salaries had a debit that made it go up. Payroll tax had a debit that made it go up. Supplies expense is the adjusted amount. And then we have the insurance, depreciation on the store, depreciation on the store fixtures, interest, and uncollectible accounts expense. When we sum these up, we should be able to balance out, at 311,542. 311,542. This would be good practice for you to balance yours out. Make sure you get that check figure. 311,542. And then we need to bring over all the accounts either as an income statement account or a balance sheet account. We know that income statement accounts are all the revenue and expenses. So we have sales coming over. We have sales returns coming over. Purchases. Purchase returns. The income summary. Again, we'll bring over both sides just to be consistent with how the book presents this. Then we've got rent, telephone, salaries, payroll tax expense, supplies expense, insurance expense, depreciation expense on the store equipment, depreciation expense on the fixtures, interest, and our uncollectible accounts expense. We total up the left side, which is the expenses and negative revenue, 254, 352. We add up the credit side, which is the revenue and the credit balances, and our net income is going to be the difference between the credit side and the debit side. That's $48. So to balance out the worksheet to 254,400 look like that. Then we have to do the same thing on the balance sheet. The balance sheet is the assets, liabilities, and owner's equity accounts. So we bring over the cash, accounts receivable. The allowance is a credit contra asset. Our merchandise inventory comes over. Supplies left over. Prepaid insurance unexpired. The store equipment, our accumulated depreciation on the store equipment. Store fixtures, our accumulated depreciation on the store fixtures is a contra asset or a credit balance. And then we have all these liabilities that end with the word payable. Then we have the capital account and the drawing account. And when we total up those sides, the debit side has a total of 57,190. The credit side has a total of 57,142, and the difference should be the same $48 that we needed to balance out the income statement. And now we're all balanced out. 57,190 is the total. And here's the totals from all the columns in the worksheet. And then the last thing they asked us is, what is the value of the net assets? the net assets are these accounts up here at the top of the balance sheet. Those are the net assets. So I will highlight them in yellow. If we total up all of the assets, which includes some accounts that are credit balances, that's the allowance for doubtful accounts and the accumulated depreciation for the store equipment, the store fixtures, when we take all the debits and subtract all the credits for these accounts that are balance sheet accounts, the total is going to be $38,160. $38,160. That's the value of the net assets. Okay, there's the balance sheet. The worksheet that's all been balanced. And that's it for this video. Thank you for listening. I'll see you again next time. Bye-bye.